All right. So, Ben, welcome back.
Hey
And
Dale, nice to be here. How's my level?
your level's good, Ben. And,
Good.
I want to acknowledge that how long have we been talking to each other now?
It's almost 3 years.
Okay. So you were one of the pioneers of commodity inflation and bull markets. I remember your call at the bottom of beans. That was a dramatic run. Commodities. God, you talked about who would have thought when you were talking about decentralization and you brought up the Fed that we'd be having, Fed scandal. So, I mean, your work is elite, and I'm looking forward to, where your head's at. And welcome back, and thanks for your giving spirit to show us your stuff.
No, I'm glad to be here. It's fun being here on a Friday, man. You guys are loose on Friday. Sounded like
Yeah,
happy hour.
yeah, we're just punchy.
Yeah, it's
Yeah,
tough.
yeah,
Fridays,
yeah.
it's tough to get
You
the
know,
energy going on Friday.
yeah. So anyway, but you felt like Friday yesterday. So here we are, Ben. Rates are finally, testing the March highs and everything. And uh, your Epoch cycle, I've seen you tweeting about it. So take it away.
Yeah, let's start. We're going to take a quick run around with a little bit of fundamentals, some cycles, and we'll end with some technicals. But hopefully we tie it all together and you kind of see where my head is and why I'm positioning in a specific way. We'll start off with the themes for the fourth quarter, and they'll bleed over into the first quarter. These are kind of 6-month themes. We'll quickly review the major cycles that we're dealing with. The Epoch cycle, as you mentioned, is the 400-year cycle, which is really fascinating to watch when you understand the cycle and then sort of see the events as they begin to unfold. It just makes you say wow. And then of course the 70s analog that we've been talking about for a couple years.
Yeah.
Things are going to get serious in the next 3 to 6 months, and I think that's something that people need to be aware of. I'm calling for an energy crisis too. In the 70s, we had the energy crisis of 73 and then 79. We're setting up for another one, and then of course,
Will it be an embargo, Len?
no, I think it is going to be led by the supply side, but for different reasons, which we'll jump into.
Putin. Okay.
No, not even Putin. It's
Wow.
really interesting. It's the world of
The
unintended
cliffhanger. Tell me
consequences.
now, man. No, go
Uh,
ahead.
and then lastly, we have to talk
Stop
about it.
teasing us, man.
Lastly, we're going to have to address inflation, talk about inflation, and if you're not positioned for inflation, I think you're going to be missing the boat a little bit here. So let's jump in.
Okay.
2021 themes. We started the year, we were looking for inflation, stagflation, continued effects of the Epoch cycle with erosion of trust in these institutions that we've depended on, supply chain disruptions and food security. All of them have come to pass to some degree, some obviously more than others. Unfortunately, fortunately, depending upon how you look at it, a lot of these things are going to continue into 2022 based on the cycles. For the fourth quarter and the first part of next year, I think the major things we want to watch and want to be aware of. One is what people are now calling the Great Resignation. And I wasn't aware of this until a little bit ago, and I don't know how many people are aware of it, but between spring and summer of this year, 20 million people quit their jobs. Did you know that, Dale?
Yeah, I knew there, I've been reading about it. Yeah, I've been reading about it lately. I didn't know it was that huge, but definitely there wasn't. It was hard to put the thing together. We had the massive unemployment, the shutdown,
Mm-hmm.
so massive unemployed, and then we come out with a labor shortage.
Yeah, it's really an odd occurrence, and
Yeah.
the result of this resignation or this issue with the
How are
jobs
they
is
paying? How are these people living?
Yeah, that's a good question. I don't have an answer. Before you could say it was it was all the government handouts that
Yeah,
sustained
now
them. I don't know.
they
I I
found
I
another way and quit their other jobs.
I don't know. Maybe it's
They're
crypto.
trading crypto.
But
They
the
became traders. Yeah.
right, the key point for us as traders is we look at, what does this mean? Well, worker churn and labor shortages are going to lead to inflation, and the kind of inflation that is sticky and not transitory, which is wage inflation. Companies are going to have to pay higher wages to get people to work for them. They're going to pass that on to the consumer, and that is sort of the underpinning of this inflation cycle, and it's setting up to be a similar setup as we had in the 70s, where it was, wage inflation that was driving a lot of what we were seeing, in addition to the commodity side. The other thing the slack labor market does, having this trouble getting people into jobs, is it creates a stagnant economy. It's hard for businesses to grow. It's hard to produce the things they need to produce. So we've got those two things working. Supply chain issues, it's clear they're not transitory, and everybody's saying, oh, they'll be able to fix that. All they got to do is this or that or the other thing. Well, if you've seen, they haven't been able to fix it so far, and it's not something that
They can't fix it just by keeping the ports running 24/7.
no, there are no easy fixes. And one of the solutions is onshoring, but that takes time. Takes time to build factories. It takes time to set up the supply chains, reestablish them back on the continental U.S. So this problem is going to be around longer than I think the consensus thinks. This one is titled Dark Winter. The next bullet. I think we're at a stage now where conflict within and between societies is inevitable, and it's inevitable because there is no dialogue. There's no discussion anymore. There's no
So
back
what's
and
that
forth.
look like? Civil war?
I don't know how it's going to take how it's going to appear.
I mean, we're already there, ideologically. So
absolutely,
go ahead. You look. You're putting it out. You got to say it.
Yeah, I think there's going to be violence. To what degree of type of war, I don't know. Internationally, between societies, I think there's a high probability we'll see a war, in next year. Within,
you mean a global one? I've heard people say that nations are going to be so busy handling internal things, they're not going to have time to fight, other nations.
it's possible. I mean, as I said, there's conflict within and between societies. How that's going to play out, I have no idea. I just know that the background frequency is supporting of it, so we have to be aware of it, and then think about how is that going to affect our investments and how we're positioned. And then the last one is the energy crisis, and as a subset of the energy crisis and supporting this commodity super cycle, which I believe we're in, is greenflation, right? Because of everybody wanting to be green and moving to be green, a lot of commodities and the demand for them that are used in renewable energy is going to be off the charts. You got silver, you got copper, you got aluminum, you got lithium, all the rare earth metals. I mean, all these sorts of different commodities go into making these renewable type energy products. So the energy crisis, which we're going to go into specifically, part of that is supportive of commodities because of this greenflation phenomena. Real quickly on the Epoch cycle, for anyone that hasn't seen our presentation before, it's a large 400-year cycle. It was responsible in how we developed large centralized institutions that we organize our society under. We're currently at the end of that cycle. And when you have a 400-year cycle, 4 or 5 years from the end of it, you're right there. We're seeing a fragmentation phase where people are losing trust and losing faith and understanding that they cannot depend on these organizations anymore. And that's part of a transition from a tribal or communal society to one based on smaller groups and individuals, where, we're going to depend on smaller groups like our neighborhoods or our neighbors or our families and each other individually to make things happen. My theory is that this is the real Great Reset, not the Klaus Schwab version that you're hearing about, that society and the world is going through this sort of transition as we enter the end of this cycle. This slide I update as more come along, but this is examples of what I call the failing large, powerful, centralized institutions. Fiat currencies, I think the jury's still out. Are they going to be around? Are they going to be replaced by cryptos? Banks right now are looking like, if central bank cryptos come in, they don't need banks anymore. And fintech and sort of digital currencies may be something that gets rid of banks. The other ones that we've added on recently, I think public utilities, we're seeing rolling blackouts, not just in Texas like last winter when they had that winter storm, but we're seeing them in Europe. We're seeing them in China. They're having trouble. The utilities are having trouble supplying power to people. And I don't know that it's coming to the United States, but I don't think we're going to be immune from it. So
no, it's there've been brownouts in California.
Yeah, and I think
especially
it's
during the fires. They shut them down intentionally during fires, but
so
there's also it's happening.
So I mean, as you're going through your life and you're seeing things and you're watching the news, keep the Epoch Cycle in your mind and look at and try and identify or try and at least be aware of these other institutions that are starting to fail, and what you might be able to do in your own life to counter that.
I have some advice, Ben.
What's that?
Stay away from razor blades.
That's a good one.
Go ahead, buddy.
Don't run with scissors, right?
Yeah.
In the 70s, big part of my thesis and my cycle work connects today and the period that we're going through with the experiences that we have on Earth in the 1970s. I kind of broken it down into two different slides here. The first, you have unpopular Republican president Richard Nixon in the 70s, Donald Trump in the current day, and then you can see how all the different things that happened in the period with these guys are the same. And remember, the impeaching thing is really amazing. There's only been 4 presidents impeached in the history of our country, and these two are connected in the 70s and present day. Now let's look at where we are now. Now we've got.
And you were presenting this stuff, Ben, before the impeachment. I remember.
Yeah, way before, because we added impeachment as another sort of indication that it was connecting, right? There was no impeachment on the first slide.
And you know what? If you go back one slide, you could change this now. When it comes to oil, go back one slide. Right. Because you had that oil went negative.
Yeah.
You know what? They've also quadrupled.
No question.
Okay. I mean, forget negative. Say maybe the low was 10.
Right.
Or, all right, be generous. The low was 40. They've doubled.
Yeah.
Okay. But they have quadrupled again.
No question. And that's, we're going to get into that with the energy crisis stuff. We'll talk about that. But this is the one after the unpopular impeached Republican presidents. We have a Democratic president who, again, this is not about politics. It's about what's going on in the world, is showing the same level of incompetence as Jimmy Carter. We're getting
Jimmy
Biden. That was my nickname for him. We're getting the same sort of stuff too. I mean, look at the things that are happening. The one I want to talk about, the couple that I want to talk about that are interesting, are new ones, is the Afghan withdrawal in 2001. Everyone said, "Oh, the fall of Kabul is like the fall of Saigon." I had when I saw all that was going on, I had a different impression. Although I was only a little kid when it happened, I immediately thought of the botched Iranian hostage rescue.
with
when we
the helicopters went
the
down.
helicopters crashed in the desert, and they just left the wreckage,
Yeah.
and they had pictures on the news of smoldering helicopters. You know,
Yeah.
it was the same. I had the same kind of feeling as I did when I saw the chaos at the airport in Kabul. I was like, wow, this is like exposing
Deja vu.
American incompetence. So I connect those two there, and not Fall of Saigon with Fall of Kabul. I think for me, the experience was more applicable there. The other two that were really interesting were,
I heard a good tweet, and I'm going to let you go, but I heard a good tweet that we're being punished for electing Donald Trump with Joe Biden.
that's a good one. You know, I guess you
What do you
get what
think?
you deserve, right?
Yeah.
You get the leaders you deserve.
Yeah.
So here, the birth, I read this statistic. It said the birth rate was down 8% in 2020. You know, against all the conventional wisdom that thought, oh, with the lockdowns, we're going to have a baby boom, right?
Yeah.
It was down 8% in 2020. It was down the most since 1973. And in
A lot of low
1970,
testosterone guys out there.
I guess, but in 1972 and 73, we had record low birth rates. And now in 2020, the birth rate goes down by 8%. So there's another, in my opinion, there's another connection. And then the
Who's
last
going to
one,
pay taxes?
that's right. The last one that I think was already on the board is there was an Australian trucker strike in 1973 and 1979, both over higher fuel prices. This year, there was an Australian trucker strike, but it was for different reasons, over the COVID restrictions and vaccine mandates. But again, there's that connection of the same type of event happening in these two different time frames. A couple others.
You that Australian truckers are crabby guys.
Yes, I guess a little moody there.
They need a pillow to sit on. How about that? They have hemorrhoids.
They need donuts.
I'm sorry, Ben. I can't help myself today. Go ahead, bro.
So a couple that I think we ought to be on the lookout for. I think the first one is low probability, but certainly possible. Jimmy Carter boycotted the Moscow Olympics because they invaded Afghanistan. There's a possibility that we could boycott the Beijing Olympics. And let's see if it happens. Again, I think it's really low possibility. If it does, it's going to end up being another hit to this connection. Now, the last one is the one we're gonna spend a little time on. The energy crisis in the 70s was OPEC and supply related. I believe the energy crisis that's coming is going to also be supply related, but it's going to be caused by this ESG movement, which is environmental, social, and governance sort of regulations that are being, put on major corporations, especially in the fossil fuel area. What is this crisis going to look like? Like, how is this crisis going to come about? Well, or why is it going to come about? Right now, we're looking at peak supply happening before peak demand. Like peak supply for energy, they think is going to be 2024, and demand's not going to peak out till 6 years later. Well, again, when you have supply falling and demand continuing to rise, that's a recipe for prices rising. These ESG mandates and pressure, sort of societal pressure on oil and gas companies are causing shortfalls in investments in new supply. And we'll go over the numbers. And the next one tells you the numbers. It's shocking. In 2014, $740 billion was invested in oil and gas field development. In 2020, it was down to $350 billion. Now, people could say, oh, remember, 2020 was a lockdown. A lot of things went down. You can't use that. That's not a good number. Well, the estimate for 2022 is $365 billion. So investments in oil and gas fields have dropped by half.
Thank you, Saudi Arabia.
Consumption and demand is still rising. Right now, what I think is happening is the oil price is searching for that level where demand destruction kicks in. How high is it? Well, let's talk about that and a few other things. First, I wanted to show you some of the CAPEX and the problem that's happening right now. This chart shows the relationship between oil prices and capital expenditures. As you can imagine, when oil prices are high, they're willing to invest more because the returns are there. When oil prices are low, they invest less. Look what happened starting in 2020. Major divergence in these two things. The oil price has risen dramatically and investments are flat to down. Again, supply issues coming. Here's energy CAPEX levels, projected and actual. Even by 2023, we won't be above where we were in 2019. Investment in supply is not going up. I saw this a couple of days ago in the Wall Street Journal. I was shocked. I thought it was a Babylon Bee or an Onion headline or something. Exxon debates abandoning some of its biggest oil and gas projects. Members of the board, a remade board with ESG emphasis, are questioning their investments in oil and gas field development. That's not good for supply.
No.
What's the upside? Where could oil go? If we look back to 2011, 2014, when prices went that high and then, in the 145 to 140, 145 range, and then they came crashing down because the destruction got demand got destroyed. It depends on the region you're in, but in North America, the estimate is they could rise 50% from current levels. That's $120 oil. So it's not out of the question. It's not like a moonshot type of thing where you think, oh, it's just going to be there momentarily. Here's crude oil monthly. I show this chart for a couple of reasons to show that, yes, we've had a tremendous move off the bottom. But if you look at this at the formation technically, we're above the highs from 2019 and 2020. And we've come back and we've checked them a few times in the last 6 months, but we're stepping out now. Now we're above the highs from early 2018 and holding above there. Do I think the 120 is realistic and not pie in the sky or crazy? Absolutely. I mean, I think we could see 114, 120, 130 crude oil in the not too distant future. All we need is some other supply issue, war, some sort of disruption, and this thing flies. Because supplies are already tight and and the relief is not on the cards either. The other area we're looking at, last time I was in, we only showed 2 charts last time other than the ES and the dollar. One was natural gas, the other was sugar. And we were talking about gas as it was, getting ready to break out right here, around this $3, 330 area, 320, 330.
Nice call.
I think this thing has a lot higher to go. I mean, $7, $9, $10 gas.
They're paying 16 in Europe or more.
Yeah, and the triangle, I know you're big on measured moves. The triangle break here, 1750.
Okay.
Which would be new all-time highs. So this, I think, is the issues with supply and the technicals and the cycles are all coming together to point towards the potential for another energy crisis and sharply higher prices in oil and gas.
Yeah.
The other thing we want to talk about before we get out of here is inflation. Inflation's here and it's not going away anytime soon, no matter what they've told you. And if you're paying attention, the narrative has changed, right? First, it was, oh, it's transitory. Then after it persisted for a while, well, it's not transitory, but it's not going to be here that long. It's going to be, it's going to come back. Don't worry about it. Pretty soon they're going to talking about, well, it's high, but it's not going to go that much higher. So inflation's here and it's sticking around. This is something we talked about early, which was the issue with restrained labor and wage inflation. This hasn't even kicked in yet, right? The hard to fill job openings are up dramatically, and wages are just starting to move. When it catches up, you're going to see inflation, and you're going to see a lot of inflation. A couple of days ago, Paul Tudor Jones did an interview, and he said the number one issue facing, on CNBC, number one issue facing investors is inflation. I'm always wary about those guys, and listen to them because, they talk their book, and they're either, if they're telling you to buy something, they're selling it, or if you're telling you to sell something, they want to buy it. But this guy is
already. I talked to him on the phone once.
Did you? This guy's already made his
mentor me and hire me.
He's already made his chops. He's in sort of the philanthropic mode. So I think when he says
from a cotton background.
Yeah, I think when he says something like this, you got to pay attention to it. Yeah. And others are saying, oh, the Fed's going to take care of it. The Fed's going to protect us. Don't worry about it because the Fed's got your back. He also said this: these guys are inflation creators, not inflation fighters.
Like that one.
And so remember that, position your portfolios to protect you from that. Let's quickly go through some charts. Here's what my best case scenario on the board right now is for the S&P. I think we just broke out. I had a cycle date this week. We've exceeded the price from the cycle hit earlier in the week, the high earlier in the week. So I think we're up and out from here. It's not going to be a straight line, but I do think we're heading higher into Q.
Where's the line in?
Q1. The targets I have are, it could be 5,033, 5,220, or 5,558 if it really goes. I think those are all possible.
Any possible just maybe a new high by 100 handles and fail?
Could be. I doubt it, but I mean, I think that's lower probability. I think this is potentially a melt up, and here's essentially why. I think the dollar is topped out. Last time I was on, I was talking about, sort of the dollar was right in here, which was, about 99, somewhere around 90, 91. I said, yeah, I think we're going to get a move up in the dollar. Now I think we're going to get a big move down in the dollar. And with the big move down, that's why I think you're going to see the melt up in equities. But then after
wrecking ball.
The wrecking ball comes after Q1 2022. Right, when the dollar just takes off super strong. Why? I don't know.
So you could be long the world until then.
That's right. I think that's right. Commodities, here's the opportunity in commodities that I think I want everyone to sort of pound in their brains, is that this is a rare setup, man. It's a generational type opportunity. Haven't seen a Dow commodity index ratio like this since early 2000s when we had a takeoff in commodities. And of course, the 70s when we had that massive move in commodities.
So how do you execute a strategy like that? You get short Dow and buy beans?
You could, if you wanted to set it up. I mean, I've identified a few different commodity charts we can look at. I think gold, we've corrected for over a year. Yeah. If you look at the correction, we're basically just checking this highs from 2011, 2012. Gold's going to be up and out. Own some gold. Silver is doing something similar, but in a different pattern. It's been more sideways, sort of a little triangle here. But again, it's sitting on top of all these highs that we saw back, 3, 4, 5, 6, 7, 8 years ago. Yeah. So silver's going to go. Copper's been the leader of the base metal type things. It's amazing. But again, look at this formation that's been happening here, sitting right on top of these old highs, right? Checking these old highs. Copper's going to go. The grains are going to go. Wheat's the strongest of the grains. As you can see, wheat, has been sideways
searching for a bottom here, Ben.
Yeah, the beans. I want to show. Corn has pulled back, but I think corn may have found its bottom. I think beans may have found their bottom here. Okay. With this last flush, both those I see higher prices on both those. Coffee looks really good. A couple softs that I like. Coffee, and then sugar. Sugar, we were talking about at 16 the last time. We've been bouncing around 20 to 19. I mean, sugar could go, 25, 28, 30, 3 or different targets on that. So I think that, having exposure to commodities, however you do it, is a great way to protect yourself from the inflation that's coming.
Yeah.
I think there's potential for an energy crisis echo of the 70s. So having some exposure to oil and gas also will protect your portfolio and enjoy the ride. I said on the SPX chart, it's last call. Enjoy your ride, because it is. I think it feels like it's last call in the S&P, where we've got into Q1. Maybe it's January, maybe it's February, maybe it's March where we put that high in, but we got to really be wary once we get there. And between now and then, find a good spot to get in and enjoy the ride.
And be short dollars. So a lot of it's going to be, besides demand, a weak dollar is going to goose it because of nominal gains.
That's true. And I would think somewhere along the lines, maybe it's the bills the Democrats are wrangling over now, something gets passed, or the Fed does something that gooses the markets one more time and provides the match that really gets things into that speculative sort of last push higher. Lastly, I just wanted to plug this thing we're doing. We've been doing weekly videos for a while now, where we just review the week, post them on the weekends, and identify markets that we think are going to go up versus stuff that may not move.
Who's we, Ben? Have you become schizophrenic since?
No, me and Barry. Remember Barry, the guy I told you about? You talked to Barry.
I thought Barry was, just kind of
my alter ego. How I keep from being lonely when I'm trading.
Pardon me, Ben. It was a great presentation, man. And really, there he is. He puts a lot of thought and energy into it, and he's been right about so many things since. And one thing, count on Ben to retweet this interview. I don't know how many times for this one, Ben. It's a good one.
This is a good one. So let's say we'll do 28. Months. How about 28?
28 times. Follow my stream. And it's good. You should listen to this more than once. Okay. I really think and write things down. And maybe, sometimes we watch things like this and, he's not pitching a trade or anything. There are things you could do.
Yeah.
With your cash and how to deploy them. And you think about it. It's not a trade. It's kind of a way to be hedged during these times, which is different. Not everyone remembers the 70s that's out there trading. Mm-hmm. I was alive then, but I really don't remember them. So anyway.
That means you had a good time.
Yeah. So I highly recommend following Ben and checking his stuff out and watching his videos. I'm glad our paths crossed, Ben.
Yeah, and I listen. I appreciate our relationship. I always enjoy spending time with you, and also I listen to your show every single day. There is no monopoly on good ideas in this business. You can always learn something, and you guys provide a lot of great information every single morning. So I do tune in every single day.
And so it's mutual respect, and thank you very much for that. And may this fall trading season be all green for you, my trading warrior brother. You and
you too, Dale.
All the people you work with, and you're like a messenger. So get the message out, and maybe you'll save some people some heartache.
I hope so. That's the goal, is to help people and see if it can keep you from stepping in a hole or hurting yourself.
I mean, maybe you go out and you stock up on items. It's simple, so you become a little bit of a hoarder and things that may not be on the shelves.
That's right.
As we go through this, I'm too lazy to do that. I actually order my groceries online and have them delivered. So, Ben, we'll do this again soon, and thank you very much, and have a great weekend and great work.
Thanks, Dale. Appreciate Appreciate the time spent with you.
All right. So everyone, that's a wrap for the week. Hope we're adding value to what you're trying to accomplish by bringing guys like Ben in. I think, give you a lot of food for thought besides what we do here before the interviews with the whole team sharing what they're risking their money on and they believe in. If you want to say thank you, you subscribe. That's the best way to say thank you. And then, you're doing something for both of us. So you could join the whole team in 6 minutes on the Morning Edge. Have a great weekend, everyone. And remember, most of all, whatever you're counting, whatever you're storing or hoarding, don't just count those items, count your blessings. And we'll see you on Monday. Adios.
Take care, Dale.
You too, Ben.